Hello everyone, welcome to Indian Economy by Aman Soni. In today's news hour, we'll discuss the important articles related to economy from the Hindu newspaper. In page 1, there is a mention of IIP growth. We'll look at it in the business page. In the editorial page, we don't have any news related to economy today. Let's directly go to the business page. IIP growth slowed to 0.4% in December. IIP means the Index of Industrial Production. So the Index of Industrial Production is a measure of manufacturing activity, economic activity in the economy. In prelims, we can get questions on who releases IIP, what are the components that make IIP, and what are the weights. They can ask arrange this in ascending order or descending order. So Index of Industrial Production is released every month by the NSO, National Statistical Office. It shows the level of economic activity that has been happening in the economy. Just like the PMI, Purchasing Managers Index, that we have discussed earlier, Index of Industrial Production also captures it. Just that PMI, the data would be slowly delayed by another 2 weeks. The IIP data would be available a bit faster. So what are the components of IIP? Various components are looked into it. Those are primary goods, manufactured goods, capital goods, consumer durables. Consumer durables are those products which are perishable in nature, like the FMCG goods, all the food items, etc. Consumer non-durables are the general white goods, the fridge, TV, AC, and there are intermediate goods, the goods which are used in the production of another goods. So all this make up the index of industrial production. Here the data shows that it has slowed down to 0.4%. That means compared to the last year, the growth this year has been positive, but the rate at which it is growing has reduced. It has slowed down to 0.4%. That means the consumption demand in the economy is low. Because of the consumption demand is low, the manufacturing is not happening at a higher pace. The manufacturing growth has slowed down. That's about this article. Global stocks slip as US inflation hits 40-year high. During the COVID pandemic, all the central banks went for easy monetary policy. They kept increasing the money supply in the economy because of the pandemic. Because of which we are seeing the after effects now. The inflations are rising. Now USA is seeing almost 7.5% of inflation. That is one of the highest inflations that USA has seen in almost 20-30 years. Because of which what the federal government is doing now, it is signaling that it is going to go for inflation tapering, bond tapering. So bond tapering means the federal government, which it is selling the bonds in the purchasing the bonds from the market now, it's going to reduce that. That means the money supply is going to reduce in the future. All this is been done to control the inflation. Because the bond tapering is going to happen, the yields of the bonds currently in USA are increasing. So this has effects on the other economies. Because the bonds on USA is increasing, the investors who have invested in other countries, say India, feel that I'll get more returns in USA than investing in India. So they would take out their money from India and go back to USA and invest in the US bonds because they are getting high yields there. The price of bonds are falling, so the yields are increasing. Bond yields and bond prices are inverse relationship. Because of which there will be instability in the stock markets of the other nations. That's why There has been instability in the European stock market. The Indian stock market last year saw speculation because of the outflow of capital. So if the investors take out money from Indian stock market and go back to USA and invest there, the prices of the Indian bonds fall in the Indian market. So people start having speculation here. They'll sell and buy at a higher rate. Because of which what happens? The outflow of rupee increases the demand for US dollars. The value of rupee falls. If the value of rupee falls, imports become costlier, exports become cheaper. If imports become costlier, the inflation in India is going to increase in another few months. Recently, RBI has gone for accommodative stance. Now we'll have to wait and see what RBI does if the inflation increases in the future. If the inflation in India also picks up too much, then RBI will go for a hawkish monetary policy, that is trying to cut down the money supply to control the inflation. And both the cost push factors, which increase the cost of the good, and the demand pull factors are increasing the inflation in USA. On one side, the cost of the goods are high, which makes it costly. On the other side, because of the high money supply, people are demanding more and the supply is less, so the price of the goods are increasing. That is about US Fed rates and impact on the other nations. We don't need to read this news. These are all related to the individual companies. We can all skip reading them. That's all. Those are the articles related to economy today. Thank you so much.